Hello, welcome to the European Open briefing for Wednesday, December the 13th. I'm Rafi Boyajan, currency analyst, and we're going to be taking a look at the latest developments in the currency markets today. So we are seeing some weakness in the US dollar this morning. The greenback came under pressure yesterday when the Republicans lost an election in Alabama where they're voting for a new senator. The Senate vote seat went to the Democrats, so this has slimmed the Republican majority in the upper house, but it did manage to rebound a little bit. Of course, today we have the Fed decision. That's going to be the main focus, although it's pretty much priced in that we're going to see a rate hike. It's going to be important to see what FOMC members are projecting about future path of interest rates in the coming years. The pound is under pressure. It's lost its shine from last week when we had that Brexit divorce deal. We've got the EU summit coming up where we might see whether or not, we might hear more about what individual EU countries feel about the prospects of the trade deal with the UK post Brexit, although it's pretty certain that they will recommend that the negotiations move on to the trade round, but still a lot of uncertainty ahead. Plus, the UK Parliament will be debating an important amendment to the Brexit bill. If the government loses that vote, it could spell trouble for Theresa May. And the Aussie continues to edge higher. It's at a one-week high. It's been lifted by strong Aussie data as well as some M&A activity impacting Australian companies. And in commodities, we are seeing oil prices rebound following that sharp sell-off yesterday, which was mainly on the back of profit taking. But let's start with the dollar. We can see here that the dollar has been pretty much range bound this week. Dollar yen yesterday briefly dipped to just above the 113 level before rebounding higher, currently trading around 113.40. There was a special election in Alabama to pick a new senator. The Republican or President Trump-backed candidate who was actually involved in some scandals, he lost the vote to the Democrats. So this takes the Republican majority in the Senate to just 51, and the Democrats now have 49 seats. Although the Democratic candidate isn't expected to take up his seat until January. So this means that the expected tax vote, as soon as the senators and House of Representatives finalize their versions, the reconciled version of the tax bill, that will likely come before the end of the year. So tax cuts should go ahead. But it does mean that President Trump might have difficulty in terms of carrying out his agenda next year with a slimmer majority in the Senate. The dollar index, we can see, wasn't as much impacted. It managed to rebound back about 94 after dipping below it slightly after that news. Yesterday, we saw the dollar index climbing as high as 94.2. The main focus today is the Fed decision. When they conclude their two-day policy meeting, they're expected to raise rates by a quarter of a percentage points to a range of between 1.25% and 1.5%. But what's going to be more important is what they're going to be forecasting for the next 2 to 3 years, especially in terms of how many rate hikes they expect in 2018. The previous forecast were for 3 more rate hikes in 2018. If that increases to 4, that would be seen as very hawkish and that would definitely be positive for the US dollar. On the other hand, if we see renewed concerns about inflation and therefore maybe they are now forecasting just 2 or something between 2 to 3 rate hikes next year, that would be very negative for the dollar. But at the moment, momentum is slightly to the upside. Yesterday, we had producer prices beating expectations. US producer prices in November rose at the fastest pace since early 2012. So that could be a sign that inflationary pressures are slowly picking up picking up in the US. Therefore, that could suggest that Fed policymakers are unlikely to forecast less than 3 rate hikes in 2018. Moving on to the pound now, we can see the pound has been drifting lower since Friday when it rose on the back of that Brexit divorce deal. Yesterday we had UK inflation data. We didn't see too much of a boost from that, just a brief spike upwards. UK inflation rose to a near 6-year high of 3.1% in November, although it was expected that UK inflation would continue to rise slowly above 3% before turning lower, so it's unlikely to change. The Bank of England outlook in terms of where inflation is heading. The Bank of England starts its two-day policy meeting today. They're expected to hold rates when they announce their decision tomorrow, and we are likely to hear anything new from the Bank of England tomorrow. So that's not going to be the biggest factor likely to influence the pound this week. More importantly, EU Parliament will be voting on whether or not to recommend that trade talks move on to the Brexit talks move on to the trade round, and also EU leaders will also be giving their approval of that as well at the EU summit that starts tomorrow. And also UK Parliament today will be voting on an amendment of whether or not MPs should get a meaningful vote on any final Brexit deal. The current Brexit or the EU withdrawal bill doesn't give the MPs the right to block or to have any say in any final Brexit deal, and MPs want to add an amendment to that bill, and that could spell trouble for Theresa May, as she would have to make closer consultations with Parliament over any type of final Brexit deal. We can see the pound yesterday fell just above the 1.33 level, so that's an important support level there. It's rebounded a little bit, but remains below its 24 4-hour exponential moving average. And finally, moving to the Australian and New Zealand dollars, we can see the Aussie has been recovering steadily from 6 months lows. It's currently trading at a 1-week high of it reached as high as 75.80. It's currently trading around 0.7560. There's some M&A speculation involving 2 Australian companies, which are potential takeover targets. That implies large flows into Australia for those acquisitions if they go ahead. So that's boosting the Aussie at the moment. Plus, we had the Westpac Consumer Confidence Index, which reached a 4-year high in December, rising by 3.6%, having fallen 1.7% in November. Also, the positive momentum surrounding the Kiwi is also boosting the Aussie a little bit as well. We saw the Kiwi being lifted by the announcement of the appointment of the new head of the RBNZ. The Kiwi is currently trading at a 1-month high. It hit 0.6961. It's just off those highs at the moment. And let's not forget that the Kiwi had fallen as low as a 1.5-year trough back in November. Looking at oil prices now, we can see that big sell-off yesterday. That was mainly due to profit taking, given that huge gains we've seen for much of December. It was boosted, especially Brent crude was boosted by the shutdown of the biggest pipeline in the North Sea that could remain shut for another 4 weeks potentially. We saw Brent crude hitting a 2.5-year high of $65.83 a barrel. It dropped yesterday to just below 63 before rebounding to about 64 again. We can see US crude fell below 57 and now it's recovered to about 57.50. We had the API weekly report which showed US stocks fell by 7.4 million barrels versus expectations of just 3.8 million barrels. So that helped that recovery. Later today, we're going to have the official government EIA report, so that's also going to be closely watched. And finally, quick look at gold prices. We can see gold prices have been drifting lower for several weeks now. It fell to a near 5-month low, $1,236 an ounce yesterday. That's mainly on the back of rising US Treasury yields. The 2-year yields in the US hit another 9-year high as we near that Fed decision later today, where they're expected to raise rates for the 3rd time this year. And also weighing on gold is the easing or the possible easing of tensions in the Korean Peninsula. After yesterday, the US Secretary of State Rex Tillerson said that the US is now ready for direct talks with North Korea without any preconditions. That's a pretty significant development as far as the North Korean story goes. And gold has now retraced almost 80% of its July to September uptrend. So it is looking very bearish at the moment. And given what we're hearing now with North Korea and the prospect of US interest rates, it's not looking very good for gold in the near term. Looking at today's economic calendar, we had very upbeat Japanese machinery orders that did help the yen a little bit this morning. We've got UK jobs report coming up later today, as well as Eurozone industrial production figures and US inflation numbers, and of course that Fed decision at 19 hours GMT, followed by Fed Chair Janet Yellen's final press conference at 19:30 GMT. That's it from me. Thank you very much for watching and have a great day.